Mira Business FM, where business comes to talk.
This is Mira Business FM. It's the morning drive with me, Tim Elliott. Good morning to you. It's finance next, and it's specifically Islamic finance. And once again, back to basics, the very basics, almost an Islamic finance 101, if that's the way you'd like to hear it described. Dr. Adnan Aziz is, the Chief Program Officer of the Global Islamic Finance for Climate, Nature and Development. He's a professor, he lectures, he's often an invited speaker as well, and is back here in the studio. It's good to see you again. I appreciate you coming back to join us. Last week, Dr. Adnan, we really only covered the very basics, and I didn't really get to most of the questions I wanted to ask you. That's the constraints of time, of course. We looked at the size of the industry. Just as a reminder, assets valued over $3.38 trillion to $5 trillion in 2024. Depends on the research that you look at, of course. Projections are for growth to reach something like $7.5 trillion in the next 2 years or so, 2 to 3 years. We discussed the history. It's a relatively young industry, as we talked, as well as briefly we looked at the way some Islamic finance products are structured. There's a lot more to talk about, so hence part two. So at its core, what Islamic finance means is activities that are Shariah compliant, so according to Islamic law. And I wanted to start there today to ask you, who's permitted to declare that a financial product is Shariah compliant?
Thank you very much, Tim, once again, for inviting me over.
You're welcome.
Time is never on our side, I know that.
That's true.
And topics such as these, they deserve as much of a deliberation as required. Now, to your question about who is permitted to declare whether something is compliant with Sharia, is typical of, think of any discipline. So if you wanted to seek a legal opinion, it won't be me. You will have to find a qualified lawyer who has been trained, has experience of issuing legal opinions, has cases on hand, understand. So this is how they would do, an accountant for that matter. Similarly, when it comes to Sharia domain, there are qualified Sharia scholars trained in the discipline of understanding a situation, analyzing it within the context, as well as in the and putting it to the prism of the Islamic principles, litmus test there, and seeing whether they can be considered permissible or not. If I were to refer to their default starting point, the default starting point for a Sharia scholar is, and this is also a Islamic legal maxim, everything is permissible unless explicitly prohibited.
Okay.
So the default starting point looking at any new situation would be, this should be okay. And then they would start looking into it. And if they identify anything which is not necessarily okay, they will see whether that can be fixed, rectified, and made it okay. So this is typically how it works. So these are the Sharia scholars, without getting into too much of a detail, but they're qualified scholars trained in Islamic jurisprudence, particularly specialized in Islamic financial transactions. So we refer to it in Arabic fiqh al-mu'amalat, which is the jurisprudence of I would say engagements, arrangements, transactions, or whatever. So there is a specific discipline. So while you will find many Sharia scholars out there, qualified, scores and scores of them, is a handful of the ones who have further specialized in Islamic financial transactions, and these are the ones who would typically issue that.
Okay.
Finally, in the context of UAE, there is an authority called High Sharia Authority, which comprises of similarly qualified scholars sitting on it. It sits as part of the board. It's a part of the central bank, UAE central bank structure. So they have the ultimate authority in UAE to confirm whether something is permissible or not. But then there are similar scholarly boards sitting on every Islamic bank or financial institution in the country, which is also true elsewhere, who would also make sure that whether, and they would be the ones issuing a religious opinion, documented opinion, telling whether it's compliant or not.
Okay, so let's look at, you mentioned the word principles there, some of the core principles. Most people, I guess, would be aware, and listening to this, whether Muslim or not listening to this, are aware that some industries, some practices would be haram or forbidden. Alcohol products, pork products, gambling, etc. You know, that's kind of well understood. It's worth reminding, I think, that Riba is a core principle, the prohibition of interest, as I understand it. How does Islamic finance operate without charging interest? And once again, if you don't mind outlining the difference between riba and, you know, a permissible profit, or I guess that's like a markup in some ways. Could you outline that for me?
Tim, this is actually, I'll try and keep it simple and practical.
You need to, for me.
Yeah. Well, even for me, I would like to keep it that way, depending on the context and the circle we are talking in it. At this point in time, we are talking to the audience, common audience, so we need to be relevant to them too.
Sure.
So I will start with that riba is the Arabic word, as we call it, and it is clearly prohibited.
Yes.
Prohibition. Now, whatever word we use to represent that is a translation.
Okay.
In English, we call it interest. In other languages, we call it something different. So to keep it simple, now riba can take different forms, and it can be in different situations. The majority of the scholarly opinion, contemporary scholars' opinion, is that the banking interest, which we see, is also a form of prohibited riba.
Okay.
Okay?
Okay.
There could be others too. So I just want to make sure that our listeners and those who are viewing it do not think that riba is only specific to banking transactions. It could be anywhere as well, elsewhere as well.
Yeah.
Now, this one particularly, when it comes to the, and there is, by the way, a minority opinion as well, which thinks that while riba is prohibited, the banking interest is not necessarily the same. But that's the minority opinion, so we'll go by the majority, which is what we see in the country here as well. So without getting into that much of a detail, but just to acknowledge that there is a minority opinion as well,
Yes.
which is different. Now, this prohibited riba is the way to look at it within the context of that. And your question was, how do we then, compare it with Islamic banks not getting into riba and still making money?
Yeah.
So how do they do that? Now, for that, we need to go back to the legal architect of the financial transactions. In a banking system, typically it is either lending the money or borrowing the money. So when you deposit money to a bank, you lend it to them.
Yeah.
And it is, and the contract you sign is a loan contract. On the other side, when you want money, the bank would lend the money to you, you become a borrower. Again, the contract you sign is a loan contract. So what is being exchanged, in any contract, there are two counter values to an exchange. So I give something in exchange of something to you. This is how a contract works between two parties.
Sure.
So in this case, the subject matter of exchange is money. You give money, you take money. And the two sides of the equation are unequal in quantity and usually different in time.
Yeah.
So one is spot, other is deferred.
Yeah.
Okay. Now, exchanging anything as an asset is fine in Sharia. And money can be treated as an asset as well, for that matter. It is also fine to defer one side of the equation, which is what happens in conventional banking. What is not fine from Sharia principle, and which is where the riba is defined, is that when you, by the majority of the scholars I refer to, they would define it that if money is exchanged for money, or any same type of assets, it could be, rice for rice. It could be sugar for sugar. Any asset which is exchanged for itself, it cannot be exchanged in unequal quantities.
Okay. Right. I understand.
Now, this unequalness could be higher or less.
Yeah.
We normally look at riba or interest as higher. It could be less as well.
Sure.
So technically, that is riba. That is what is riba. So unequalness of the same asset being transacted, exchanged in a transaction, is something which is prohibited. Now, that is and that is the fundamental model on which banks operate. They exchange money for money in the form of a loan contract, and there is unequalness in it. And that is on a deferred, and they justify it on the basis of deferment and whatever, which is okay. I mean, time value of money in some ways they would like to bring into the question. The point I would like to make here is that Islamic banks and financial institutions, their architecture is such that they avoid this technical basis on which riba any unequalness is considered riba. So what they do is while it is not permissible to exchange same type of assets in unequal quantities, it is absolutely fine to exchange any different type of assets in any quantity we want. So essentially what it means is, if you remember last time we talked about car finance as an example.
Yeah.
So Islamic bank would say, we'll buy the car. So they buy the car on spot. What is being exchanged? Money for a non-money asset, which is car. So they buy it for cash, and then when they become the owner and sell it, so they now sell a non-money asset for a money against it, which is a different. So now we are exchanging different assets with each other, hence why we can determine whatever price we want. So since we are not exchanging money for money directly, so it allows us to do it that way. And this is how banks manage to make money, Islamic banks. But as I said earlier, if you remember, that when it comes to how much of the money to make, since the market is predominantly still conventional, so they would want to price their products, i.e. the profit margin, which is the same.
Yeah.
Now, why don't we call it riba, or why don't we call it interest? Is because the basis has changed now. The legal basis has changed from being a loan to a trade.
Okay.
Right? So in this example, I, as a bank, I bought it and I sold it. And hence why, if I buy it for X price and sell it for X plus Y, by any accounting standards, I can simply not call it riba or interest, because when I book it in according to international financial standards of reporting as well, I will book it as profit. That's my profit. Hence why we call it profit. It's not that we just change the label of it, because the basis of it we have changed as well. I hope that makes sense.
It does make sense. I mean, it's as though the idea comes from this sense that if you do something that's unfair, that's frowned upon. There is an inherent sense, I think, of that transactionally it has to be fair for both sides. There's a mutual respect issue here, and I wonder if that's where much of this is derived from. And there's another point I think I'd like to make, and it relates directly to this. Excessive risk, also something prevalent in banking circles, certainly conventional banking circles. People try to mitigate risk, but there is risk in financial transactions. Excessive risk or uncertainty is also something that is not permitted in Islamic finance, isn't it?
Correct.
Yeah.
Now, this is the other principle in addition to riba.
Yes.
The prohibition of riba. So now you're referring to prohibition of excessive risk.
Yeah.
Now, what it also means by implication, that risk is permitted. It's the excessive nature of it which is not permitted.
Yeah.
Okay?
Yeah.
And the reward...
So again, you start from that point. It's okay.
It's okay to have risk.
Obviously, it's not okay.
Yes.
You get to that point.
Yeah. I'll give you an example once a friend gave, and I liked that. When you go to a grocery shop, you buy, say, fruits, you buy oranges, you buy mangoes, whatever. The risk you take is that some of these oranges might not be good to eat, but you still buy it as a part of the package. And that is the risk you take. So if a risk is bundled in a transaction, that risk is okay, because that's a natural part of the transaction.
Okay.
The moment you start trading in the risk itself on purpose, that is where it becomes problematic. So, so for example, you start trading in futures and forwards. You're taking a risk position, you're taking a view on it, and you're trading that risk, or options for that matter. Conventional, I mean, more complex discussions in terms of derivative markets. So that's where the problem is. Now, if there is no risk at all, that's also not permissible, because you cannot justify reward without taking a risk.
Okay, yeah.
So there has to be a degree of risk in it as well, in every transaction. That is the basis of you making money out of it. In a trade, so if I go back to the simple example we've been talking about, the bank buys the car. Now the risk is, what if you as a customer refuse to buy it from the bank? And then the bank has a now, there are ways we mitigate that too. But I'm saying that because we identify a risk, then we want to do something to manage it, mitigate it as well. Similarly, the risk of ownership. What if I buy the car today as a bank and sell it to you tomorrow? The price can change over time. Now, I might have bought it maybe tomorrow, the price is actually less. I bought it more expensive today. Or if you don't buy it, I have to sell it back in the market, and I might lose some money. So there's always a degree of risk involved in it. Now, we manage it as bankers. We are also smart people. So we know those risks, and hence we manage them. But that's different ball game. That, okay, if you know the risk, you want to manage it. Excessive risk could be an example of, let me pick an example from insurance industry. So in a conventional insurance arrangement, we take an excessive risky position. I buy a policy by paying a premium. First of all, I'm paying money today to get money in exchange in future if an event happens. That is unequal trade of money, which is riba already. That's why conventional insurance is not okay. The other element is the risk element, which is what is relevant to this discussion. The risk I'm taking is, so it is, I'm protecting my risk of an event of something happening in future. I'm protecting that, right? And for that, I'm taking an excessively risky position. If the event doesn't happen, I will lose this money. Okay, so I've kind of gambled here, which is an excessive, extreme example of risk, excessive risk. But the risk can also be, excessive risk can also be in the contracts themselves. When we sign these trading agreements, if we keep the prices ambiguous, if we do not specify the conditions clearly, any contractual arrangement which can lead to a potential dispute later is also considered excessive risk. That's also prohibited. So there are various ways in which we look at. But yes, to answer your question, if you allow me to give you a classical example from jurisprudence.
I'd like to hear it. Yeah.
It used to be very common, and it does happen, by the way, even today.
Okay.
Now, I can't say you don't quote me because I'm on the air in public. But it is true, even today it happens.
Right.
You know, people used to do what we call bay al-habla al-habla. So, selling the baby in the womb of the camel or horse. Now, basically saying, okay, I'm selling this horse to you or camel to you. It's pregnant. So I'm pricing in the baby in it as well.
Okay.
So do we know the gender of it? And now maybe today we can, but previously we couldn't. So we wouldn't know the gender. But can we guarantee whether this will be a stillbirth or a baby would be alive? Can we guarantee it would be not disabled, healthy and all? So we're taking, these are excessive risks. So those are classical examples to make us understand that in transactions, we should not be allowing excessive uncertainty or risk.
Okay.
I hope that explains.
No, that does explain it. We're talking to Dr. Adnan Aziz. He's Chief Program Officer of the Global Islamic Finance for Climate, Nature and Development. He's a professor, and we're talking Islamic finance today here on Mira Business FM. Don't forget, you can subscribe to our social channels. Get in touch, let us know what you think, and find us wherever you get your podcasts from. This is Mira Business FM.